Hello guys, thank you very much for joining me. This is Roy Machingura. Welcome back to Pip Valley, where we are going to do the second segment of the day. So we're going to look at the USDZAR pair, where we'll be looking at the weekly and the daily charts, preparing for the upcoming week. If you haven't watched the monthly analysis for the EURUSD, just click on the link above. Without wasting much of your time, let's get straight into our analysis. So I have retained the structures that we had that were supporting the bearish movement, and also I have added this triangle that I've just seen, which means that supporting the bearish trend, I have this symmetric triangle. I also have this head and shoulder pattern, as well as this symmetric triangle that we have discovered. You see where this is going to apply, or where this is going to link with one of the trade scenarios that we are preparing for. Then also I've also added this general bearish trend direction, which also facilitated the creation of the triangle. Also, we have this breakout trade. At this point, the price is now retesting 15.21600 as a resistance zone for the third time. So having all this in mind, what we're expecting in the coming week is that first, initially, we're just going to consider the breakout trade, right? So in terms of the breakout trade, what we're expecting is that if the price, as it is seeking the retest of this for the third time, if this holds as a resistance zone, then we'll be expecting the price to move to the downside. So upon moving to the downside, we can expect it just to move to 14.39096, or breaking it, retesting it, and move all the way to 13.5693. So remember, I say that you'll see where we are going to use this, where this triangle is going to come into play. So as we say that usually when there is a triangle, the movement to the downside or to the upside facilitated by the triangle will be equal to the height of that triangle. This is the height of the triangle. So the movement to the downside from the price breaking from the triangle will be the same measurement as this, right? We can safely say that after the price broke this level, we were expecting that the price movement to the downside will be equal to this distance, which would mean that we were expecting it to test 13.56593 zone. The other scenario that can be supported by this movement also is that since the price broke out of the triangle, it hasn't retested the level of the triangle, so we'll be expecting that the price will move up to this zone, retesting it now as a resistance zone, upon which it would be rejected and then forced back down, where we would expect it to come to 13.56593, of course in higher highs and higher lows. We have bullish scenarios that we're expecting, right? So we're saying that another scenario that we have was that of a reversal, right? The reversal, because we have a double bottom here, right? And the double bottom, we said it's a structure for reversals. So we'll be expecting that since the price has made a double bottom here, and if you look closely, the price has made a higher high. So what we'll be looking at now is that if the price may break this zone, pull back, right, and if it forms a lower high, a higher low anyway above 14.80348, then we'll hold bullish position, expecting the price to move to the upside. Okay, so these are the scenarios that I'm expecting on the weekly chart. Now let's move on to the daily chart. So we have the bearish trend, and also we have the breakout scenario supporting our movement to the downside. Then in terms of the movement to the upside, we have also a reversal pattern, right, that forming. We have this double bottom, right, that may force the price to move to the upside. So given this, we have got three scenarios that we're expecting: the reversal pattern, the breakout pattern, and also the range, the price range. We'll start with the bearish pattern, which is the breakout pattern, right? So as far as the breakout pattern is concerned, we have said that the price has retested this zone for the third time. We are expecting that if it's a breakout, this zone is going to hold as a resistance zone, right? And upon holding as a resistance zone, we'll be expecting the price to move to the downside, and possibly break this zone, retest it, and move all the way down. if the price is ranging, we can also use it together with the breakout, right? So upon this holding, we'll be expecting the price to move to the downside, but only up to 14.39821. The other way we can enter into our bearish trade maybe more conservatively. So what we can wait for is that since the price has made a higher high here, we can wait for the price to first make, because we cannot sell in a higher high, right? We have to wait for the confirmation that the price is actually moving to the downside. We have to wait for the price to first make a lower low. So this means that the price is going to break it's going to close below 14.92790 zone. So upon retesting it and it closing below the previous high, that's when we can be comfortable taking short position up to 14.39287. Or if we want to be more aggressive, or if we are more optimistic, we can say the price is going to break this zone. So it will mean placing our take profit beyond this level. So as far as the bullish concerned, we are playing a reversal, right? So as we noticed, the price made a double bottom, and we said within this double bottom there was also another double bottom. After the price made this double bottom, we can see that the price went on to form a new high. After forming the new high, it retraced and formed a new low, which was a higher low, and then came to establish a higher high. So as far as the bullish move is concerned, what we'll be expecting is that since the price is now in a higher high, we'll be expecting the price to pull back, right? We'll be waiting for the price to pull back, and if it closes above 14.92790, then we can hold a bullish position, maybe up to any point within this resistance zone. And so the other scenario is that upon forming a higher low from this point, the price may break this zone, pull back, and then move to the upside. But if you really want to be very conservative, you wait for the price to break this zone, then upon pulling back and retesting it, that's when you can hold a bullish position and then expecting the movement to the upside. So our bearish trades are mainly based on the bearish breakout and also on the price ranging, right? Then our bullish trades are based on the reversal pattern. So thank you very much, guys, for joining me. These are the scenarios that we are preparing for as far as the USD pair is concerned. You have to take note that anticipating or preparing for this movement, it doesn't guarantee that we are going to execute properly. So you may find that yes, we might pick that there is going to be a bearish breakout, right, or there is going to be a reversal, but timing is of importance. So you need to properly time your trades, and at times you find that you might also need to enter into 2 trades before you get the timing right. So hence the need for you to have a good risk to reward ratio, for you to have also a good risk management in place, so that when you get into 2 trades in anticipation of a maybe reversal, that one trade that you are going to get right, it's going to cover for the losses of the previous trades. Hence my focus this year on risk management and money management, because that's how you get to actually make something out of these preparations. So that leaves me to say, keep your risk managed, grind the markets with great. Roy Machingura out.